Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today I'm going to go over some more information about kind of the overall markets. We've got behind here Scott. He posted a slingshot cheetah pattern where uranium's starting to really head on higher. And Scott and I, we both purchased down here when it pulled back. I'm hoping that the people on the Finding Value memberships, the platinum memberships, when we do our calls, hopefully they got in as well. And it's still a good time to get in, but into the companies that that at least I really like. One thing I noticed is I think quite a bit different than most people. I think my time frames are a little bit different than others. They think things can turn on a dime. I do not think so. I'm not a contrarian to be a contrarian. I'm a contrarian only when it is right. I am in the public, or I would be in agreement with the public, is so long that I think that that they're right. It's not about, I don't care what people label what. It doesn't matter. As long as you're right, you're right. And the tough part is all the minutia that's out there that is dissuading you from the truth. The truth can be found in inventories. Disregard everything else. Disregard the garbage. Disregard the opinions. Disregard the sentiment. Disregard all of those things, because sentiment could be bad or poor for home buyers. You know, you could have home builders, and then you could have the consumers or the home buyers, their sentiment. Well, if you're in the largest squeeze in housing that we've had for a very long time, your sentiment will go down because you can't get homes. It's hard to get homes, and your home won't be complete on time, and things are not necessarily going to run smoothly in a supply chain jacked up world with home buyers being priced out every single home you try to buy. Of course your sentiment's going to be low, but the sentiment doesn't mean that they're negative on the housing market means that the house prices will go down. And I'm seeing a whole bunch of people use a bunch of information and data. They're drawing incorrect conclusions from data. They're drawing their information or their conclusions from, I would say, data that isn't even data. You're drawing an opinion from an opinion. So now you've got an opinion squared. And that doesn't mean anything. And I'm just seeing all these people, and I'm seeing some people talk about the oil markets being like $50 overpriced or more. I mean, are these guys on crack? I don't understand what they're thinking. Now, here's something. I'm just kind of scrolling down, and this is what I'm kind of looking at from Twitter. Here's uranium to S&P 500. I like that he's using ratios. That is really good to be using ratios, and that's just showing the outperformance. Money is starting, URNM is starting to outperform the S&P 500. That is the break apart, the decoupling that we're looking at. Now, I don't know if we're going to be completely decoupled. It's going to take time, and it could be instant. I think that we're only coupled through the leverage in the system. Once we get kind of deleveraged, or the leverage gets to an area where it's not a sell everything event, and again, I can't tell you exactly that timing. Once that all breaks apart, you're going to see uranium and these energy just go ballistic. Uranium is a viable alternative that doesn't have the complications of a mineral and supply chain problem. A lot of these are already in place. It also provides good energy return on investment, doesn't have electricity storage problems, on and on and on and on about all the problems that you're going to have with renewables and electric vehicles. And it's there. I mean, it's something that we know is proven and works. You can store your inventory in uranium, and it's very easy to do that with months and months or years of worth of fuel. So I think that's a good one. Now, here's official sources stated that it's false and misleading. I would like to be invested for $300 oil in the next 2 to 6 years, and then for $80 oil by 2040. commodities this decade, then go back to long duration BS for the next two. If we come on down here, uranium to Uranus, that's great. But I was looking at this. It says, wow, oil and gas windfall profit tax. White House Remitory says they have looked at and are considering congressional proposal to tax oil and gas windfall profits. And Josh says this would be bullish for the commodity and potentially only charged to big oil. And it's a terrible policy idea, which it is. But look at this, crude oil stocks, and this is what I was looking for. Minus 5.1 versus minus 2.1 expected. We're drawing down oil stocks, drawing down gasoline, drawing down distillates. This is the overall. We are actually continually drawing down our inventory. And someone comes out earlier, I think it was Ed Morse, and says that we're $50 too high in oil or something. This is the fact. This is the supply-demand balance that we're seeing in the markets. This needs to go back up. And this, to me, looks like it's accelerating to the downside. This does not look good for oil prices to go down. I don't know what kind of drugs these people are on. I don't understand the viewpoints of a lot of these different people. Their time frames are messed up. Their calls to be contrarian, just to be contrarian, are ludicrous. I mean, that's not what you want to do. You want to make a call because you're right, not because you're being a contrarian. And I don't know. I've just been looking at a lot of people and the way that they're writing and talking, and I just completely disagree. And I think their time frames are all messed up. I don't think the housing market can turn on a dime from being some of the largest months increase and then just reverse it and go down. I and be in a bubble. That doesn't make any sense. It doesn't make any sense. It has to slow down first, in my opinion. Here it says, let's put this week into perspective. From March 27th to May 6th, 2020, during the peak of COVID, with a world shutdown, the big three rose by 15 million barrels per week on average. This week, we fell by 12 million barrels. Seasonality in this week's favor, but still stunning. We got the rip your face off rally in uranium that's happening. Oil equities are tempered so far. Time for you to catch up. And that also talks about what I talked about over the finding value meeting this weekend, where people are just chasing price performance. They wanted to chase oil because it's going up and uranium was down. It's like, no. You want to be buying the things that are not going up, like uranium and precious metals. And precious metals are finding their footing here too, and I like them a lot. And I talked a lot about the royalty companies and how I thought they were going to do quite well coming up. Here is, so we just get a major low every 3 years in Solj then. Bouncing off support in 16, 19, and 22 low. And I agree, that's probably what we're doing. So those are some things I wanted to talk about in the markets. Uranium's doing quite well. We've got the precious metals camp is doing quite well. They're up quite a bit. Silver's up quite a bit. Platinum's killing it. Absolutely killing it. Like, no one could have guessed this. Right. We've got a weaker dollar and a weaker 10-year yield. Slightly weaker on the 10-year yield. We've got commodities going higher. Here's the dailies here. That looks good. Just kind of looking around. Oil is heading on higher. It started out kind of low, but this is a nice, good bullish candlestick up for a potential move higher. Looks really strong. I like it a lot. The companies are hanging in there pretty well, depending on what you're looking at. The service companies are doing well too. Uranium's obviously doing some cheetah things, moving on up. Solar's killing it. I see that. The copper stocks are doing really, really well. Something like a Tech Cominco is breaking to the upside. That looks fantastic. FCX is moving higher. The big diversified mining companies are moving on up. There's Vale, COPX is doing well. Rio. So we're seeing basically all the commodities do very well right now. We are seeing The overall market's pulling higher too. We'll see how long that subsists, but it does look pretty good. That's a bullish engulfing there on the NASDAQ Composite, U.S. Composite Index. So those are also heading higher. So it looks like everything is basically game on today and moving on up. Intrepid Potash looking really good. Mosaic also looking very good. Those are touching on some. And I've got a whole bunch of other ones. It looks like the shipping sector is doing very well. But overall, it looks like a very strong market. And the one thing I do want to end on is to do well, you have to identify what's undervalued. And then you want to identify why money is flowing to certain sectors. That's where the value is, guys. If you want to be a investor that is incredibly good, you have to identify what the pricing of that asset is, what's cheap, what's expensive. And then you have to figure out why money is going to rotate to those assets that are cheap. What is the trigger points? And that's exactly what I've done on the Platinum or on the website. I'm sharing all that information that I've showed you guys and teaching people how this all works. That is the value of the website. It's not necessarily picks, it's learning the markets. Once you can learn the markets, and I honestly, I would never pay for a website ever until I created so much value that I thought that this was, one, correct, and two, could be replicated, and three, could be taught. And once you figure that out, and which I did, at least I think I did, based off the three pillars, which is ratios, market conditions, and technical analysis. The reason that I would join my own website, someone asked me this, that's why I'm answering it. I would join my own website because it will fast track you to where you want to be. If I knew what I knew 20 years ago, I would pay, after thinking about this, I would pay tens of thousands of dollars for that. Why? Because then you would accelerate all of those earnings forward. And you're going to have to learn this. You're going to have to learn it. Why do you have to learn it? Because you're not going to be able to hold on. You're going to have these big market fluctuations and the big volatility. And that is what you're going to have to learn, is how to ride through all this. That's where the value is. It's knowing how to value assets. It's knowing the technical analysis. It's knowing what is causing money to rotate between the sectors. That is the entire value there of investing. That is what everyone needs to learn if they want to be successful in the markets. So I did redo the website, so everything looks a little bit different. It should be a lot easier to navigate. Fingers crossed. Let me know if you guys like the website better. If you don't, also let me know that. Let me know what we can improve. I say we because I didn't create it. Someone else did. Thank you for that. I really appreciate his help, and I'm very thankful for that. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. I'll give an update later today, hopefully, on the website, on what I would be purchasing. A lot of things are looking a lot better. I'm seeing the buying pressure step in, and I'll add that later tonight for everybody. I wanted to make sure that the buyers stepped in here. It sure looks like they are, and there's a lot of stuff out there that looks really good. All right, guys, we'll catch you later. This is Finding Value.